The first $100,000 is the hardest money you'll ever make. Not because the world is unfair. Not because taxes are crushing you. Not because your boss is incompetent, or life is conspiring against you. It's hard because you don't have capital. You don't have a base to work from. You don't have leverage. And without leverage, you are running in circles, like a hamster on a wheel. Sweat alone doesn't make wealth. Effort alone doesn't build freedom. You're trading hours for dollars. And dollars don't compound when they're tied directly to your labor. Everyone loves to fantasize about compound interest. They see the charts, the snowballs turning into mountains, the magic of 10% a year. The graphs, the calculators, the stories of someone turning a small seed into an orchard of wealth. All of it sounds magical. But here's the inconvenient truth. Compound interest is useless if you don't have anything to compound. You can dream of compounding. You can study it endlessly. But if your bank account is empty, it doesn't matter. It's like planting seeds in a field that has no soil. You'll wait for growth that never comes. That's the cruel joke life plays on those who are just starting out. Everyone wants the snowball effect. Everyone dreams of it. They want to see their money grow effortlessly, silently, while they sleep. But nobody wants to push the snowball up the hill in the first place. That initial effort is brutal, often humiliating, and painfully slow. And yet, that uphill battle is unavoidable. When I was starting out, I wasn't dreaming about millions. I was wondering how to scrape together my first few thousand. Every expense felt like a mountain. Rent, bills, medical emergencies, car repairs. The unexpected always finds a way to hit you. Nobody hands you a cushion. Nobody says, "Here, have a start. You'll figure the rest out later." You learn the hard way that the system is not designed for those without a financial base. I remember a winter morning when the heater broke in my small apartment. I had $100 in the bank, and the repair cost 4 times that. I sat on the floor shivering, wondering if I would make it through the week. Each day was a test of patience and endurance. Moments like that teach you the brutal arithmetic of life. Being poor is expensive. It isn't just about not having money. It's about how everything costs more when you have less. Every problem feels magnified. Rich people? They're playing a different game. They already have chips on the table. You're still trying to buy in. They're not necessarily smarter. They're not luckier. But they have leverage, a foundation, a starting point. They've crossed invisible lines you're still staring at from below. And you wonder, how do I get there? How do I even start? The reason the first $100,000 is so hard is simple. You're working with muscle, not money. Every dollar is sweat. Every step feels uphill. You save $500 and then the car dies. You stash away $1,000 and suddenly your kid needs braces. Life conspires to remind you that the first money is always the hardest. The struggle isn't just financial, it's mental. Every setback feels personal. Every delay feels catastrophic. But here's the paradox. The moment you cross that invisible line, something shifts. Suddenly, your money starts pulling its weight. 10% isn't just a rounding error anymore. 10,000 on 100,000 is real. Real enough to make you notice. Real enough to make a difference in your life. Real enough to validate all those sacrifices, late nights, and disciplined decisions. The first $100,000 is the most important financial milestone of your life. You can have brains, ambition, charm, but none of that matters until you get that base capital. It's not about being smart. It's about being stubborn. Stubborn enough to endure, to delay gratification, to continue even when it feels like nothing is happening. The first $100,000 might take years. The second $100,000 takes half that. By the time you reach 500,000, the struggle for the first 100 will feel like a distant memory, like a mountain you climbed without realizing how far you'd come. The first $100,000 isn't just money, it's proof. Proof that you can build, that you can endure, that you can conquer the initial climb that stops so many before they even start. Hard work alone doesn't make you rich. If it did, coal miners, factory workers, delivery drivers, and office clerks pulling double shifts would be billionaires. Labor doesn't scale. Time doesn't compound. You can work yourself to exhaustion, putting in long hours, sacrificing weekends, skipping vacations, and pushing through sickness, and still have nothing to show for it when the paycheck finally arrives. You might feel proud of your effort, and yet, at the end of the month, the balance in your bank account doesn't reflect all that sweat. I've seen men and women smarter than me, more talented than me, working longer hours, grinding harder, and they stayed broke. They showed up every day, executed flawlessly, and sacrificed their energy and their health. But the rewards never materialized. Sweat evaporates the moment it hits the floor if you don't have a mechanism for it to grow. It's painful to watch. You wonder, how can someone work so hard, day after day, year after year, and see nothing in return? The answer is simple. Labor alone cannot create wealth. Labor pays the bills. Labor pays rent. Labor keeps you alive. Labor keeps the lights on. Labor keeps the roof over your head. But it does not build freedom. Labor does not give you options. Labor does not buy time. Labor does not multiply. The truth is brutal, unflinching, and inconvenient. Capital works. Labor doesn't. Capital doesn't get tired. It doesn't ask for weekends off. It doesn't come home drunk or distracted. It doesn't call in sick. It doesn't demand vacations. It quietly multiplies if you don't screw it up. Once you truly understand this, your mindset shifts. You start to see labor as a tool, a necessary input, a temporary bridge, but not the foundation of lasting wealth. You start to separate effort from results. You start to appreciate that building freedom requires a different kind of muscle, one that doesn't wear out at the end of the day. Until you have money working for you, you are just another beast of burden. You are a cog in the machine, relying on raises, promotions, or constant job hopping. You're already on the losing side. Every hour traded for dollars is a limiting factor. Every minute lost is a minute that could have been invested, compounded, multiplied, or put to work building something that grows while you sleep. Every extra shift, every extra hour, every bit of effort counts, but only up to a point. Beyond that, labor is finite. Your time, your energy, and your attention are finite. Capital, on the other hand, is infinite in its potential if you know how to deploy it. That's why the first $100,000 is a war of attrition. You're clawing your way out of the labor trap, stacking the first pile of chips that can actually earn their own keep. You're laying the foundation for leverage, creating a base from which compounding can begin. Once that pile exists, everything changes. 10% on 100,000 is no longer negligible. Your capital begins to whisper, "Relax, I'll carry part of the load now." Suddenly, the math starts working in your favor. Every decision you make gains leverage. Every dollar you save, every investment you make, earns more dollars. You stop being a slave to your schedule. You stop trading hours for dollars and start letting money work alongside you. I'm not saying quit working. I'm not saying abandon your job or avoid effort. I'm saying stop believing work alone is the ticket to financial freedom. Most people never escape the wage treadmill because they confuse effort with progress. They confuse busy work with building assets. The only way out is capital. Cold, hard, accumulated capital. Until then, your labor isn't saving you. It's just keeping you tired. It's just keeping you afloat. True wealth is earned when your money begins to work for you, When your dollars stop being a reflection of your hours and start being a reflection of your strategy, patience, and discipline. The beginning is humiliating. There's no way around it. You save $6,000 in a year, every hard-earned dollar carved out from paychecks, sacrifices, and strict budgeting. You invest it, carefully, wisely, hoping for growth. And maybe, just maybe, if things go well, the market returns $600. $600. One broken appliance, one unexpected dental bill, one car repair, and it's gone. Vanished as if it never existed. The effort feels wasted. The months of restraint feel pointless. Most people quit here. They stare at the small returns, shake their heads, and think, why bother? What's the point of this tiny growth when life keeps demanding more of me? This is the trap that stops almost everyone. Small numbers feel meaningless. Our brains crave instant gratification, visible results, and dramatic wins. But wealth doesn't work that way. Compounding doesn't make headlines in the first year or even the first few. If you let impatience take over, you strangle the process before it even begins. People save, get bored with the slow progress, spend it all on something fleeting, start again, quit again. They never realize that the game is patience, not speed. The real magic of wealth doesn't happen in flashy moments. It happens quietly, invisibly, behind the scenes, over years. While everyone else is caught in the excitement of the moment, you are building an invisible empire. Brick by brick, step by step, day by day, doing the same routine that others call boring, mundane, or unworthy of attention. But here's the truth. The trick isn't brilliance. It isn't intelligence. It isn't a lucky break. And it isn't discovering some secret formula. The trick is endurance, consistency, stubborn persistence in the face of discouragement. Stick with it. Year 1, your capital might earn as much as you saved. Year 2, it starts earning more than you saved. The numbers slowly start working in your favor. That's when people begin asking, how did you get so lucky? And you smile quietly to yourself, knowing the answer isn't luck. It's patience. It's repeated, deliberate action. It's refusing to trade long-term gains for short-term comfort. It's understanding that every dollar saved today compounds into tens, hundreds, and thousands tomorrow if left alone and nurtured with care. I remember friends laughing at me for driving a 12-year-old car while they leased shiny new models. They whispered behind my back, questioned my choices, and thought I was cheap, frugal to a fault, or even missing out on the lifestyle they valued. I was none of those things. I was making deliberate, calculated decisions. I was building the foundation for my future. Every sacrifice, every moment of restraint, every dollar invested was a step toward financial independence. I was quietly stacking dollars that would someday speak louder than any car, any vacation, any flashy lifestyle ever could. Each small choice, the old car, the skipped dinner, the delayed gadget purchase, wasn't deprivation. It was strategy. Each dollar saved, each inconvenience endured, was a soldier in my growing army of future wealth, patiently working behind the scenes, preparing me for a life where money would no longer be a constant worry, where freedom would replace stress, and opportunity would replace limitation. You learn humility in these early stages. You learn that real wealth isn't shown in social media posts or weekend trips, but in invisible growth. It's in the patience to resist temptation, the courage to delay gratification, and the discipline to keep moving forward even when it seems like nothing is happening. Those early days, full of small victories and quiet sacrifices, are the ones that define your financial character. They teach endurance, self-control, and the slow, almost imperceptible power of compounding. The humiliation isn't failure. It's preparation. It's the classroom where you learn the rules of money, the importance of consistency, and the secret that no one else wants to admit. Wealth isn't built in moments of comfort, but in moments of restraint, patience, and quiet, steady action. The fastest way to stay poor? It's deceptively simple. Raise your lifestyle every time your income rises. Most people do exactly that without even thinking. They get a raise at work. Maybe it's a few hundred, maybe a few $1,000s more per month. And the very first thing they do is upgrade their lives. A bigger car, a larger apartment, a fancier phone, or a vacation they couldn't afford the previous year. They tell themselves it's a reward for their hard work. They call it treating themselves, enjoying the fruits of their labor, or celebrating success. I call it shooting yourself in the foot. It's the fastest route to financial stagnation, and it's invisible until it's too late. Every raise is eaten by lifestyle inflation, leaving you trapped in the same cycle you were trying to escape. You don't need a PhD in finance, an MBA, or a spreadsheet to understand this. The math is simple. Spend everything you earn, and you'll never build capital. Inflate your lifestyle in proportion to your income, and you will never cross the line to that critical first $100,000. It's not a mystery, it's arithmetic. Money is not magic, it's simple math. Every dollar you spend today is a dollar that cannot work for you tomorrow. Every unnecessary upgrade delays your freedom, ties you to a paycheck, and prevents your money from compounding quietly in the background. Small choices add up over time. The decisions that seem trivial, upgrading your car 1 year, ordering takeout instead of cooking, leasing instead of buying, compound too, but against you. Debt is the ultimate trap. Debt is the enemy of compounding. Unlike investing, which quietly multiplies your wealth over time, debt works against you every single day. Interest is relentless. It doesn't take breaks, it doesn't forgive mistakes, and it doesn't care how hard you work. People with decent salaries often find themselves trapped because they cannot stop being reckless with money. They refinance their homes to buy toys, carry credit card balances with 20% interest, while thinking they are investing at 10% returns. That isn't investing. That's delusion. That's surrender disguised as strategy. It's the silent leak in the bucket of your future wealth. You work harder, earn more, and yet it never seems to matter because the interest and lifestyle inflation quietly drain your efforts, leaving you perpetually behind. I've met lawyers, doctors, engineers, and executives who earn 6 figures, often far more than the average person, yet live paycheck to paycheck. How is this possible? They refuse to delay gratification. They confuse consumption with progress. They measure success by what they can buy now, rather than what they can secure for the future. A bigger house, a fancier car, luxury vacations. All of it becomes a trap when bought on borrowed money or fueled by incremental raises. The cruel irony is that the higher their income climbs, the more elaborate their lifestyle becomes, and the further away they move from true financial freedom. It's not a lack of intelligence, it's a lack of discipline. They are prisoners of their own habits, blind to the compounding power of patience and restraint. The lifestyle trap is invisible, seductive, and persistent. It whispers to you constantly, promising comfort, status, and recognition. But it comes at the cost of wealth. Every decision to inflate your lifestyle, every impulse purchase, every debt-fueled upgrade is a step backward on the path to financial independence. The trap is subtle. It's not dramatic. It doesn't announce itself with alarms or sirens. It hides in your everyday choices, in your small concessions to comfort, in your constant need to match the appearance of success. Until you recognize it, until you fight it, it will quietly keep you poor, no matter how much you earn. The first $100,000 is already hard enough. Don't dig yourself a deeper hole by making avoidable mistakes. Avoid stupidity first, brilliance second. You don't need to be a financial genius, a market prodigy, or someone with an encyclopedic knowledge of stocks and bonds. You just need one thing: discipline. Discipline is the secret ingredient that most people completely ignore. It's the quiet force that separates those who steadily build wealth from those who remain stuck in the same financial rut for decades. Discipline is not flashy. It doesn't get Instagram likes, and it won't make you look smart in front of friends. But it works. Consistently applied, it produces results that intelligence alone cannot achieve. Discipline isn't glamorous. It isn't about flashy spreadsheets, complex algorithms, or the illusion of clever investing. It isn't about knowing all the technical terms or following the hottest trends. It's about making choices when no one is watching. About saying no when every part of your instincts wants to say yes. Saying no to dinners out with friends who spend recklessly. Saying no to upgrading your car when the old one still runs perfectly fine. Passing up vacations you could technically afford because those dollars belong on the battlefield of compounding, not fleeting entertainment or temporary pleasure. It's resisting the urge to keep up with neighbors, co-workers, or influencers, and choosing the slow, patient path that actually builds wealth over time. Markets will fall. Stocks will drop. Investments that looked perfect yesterday might seem like disasters today. One week your portfolio is soaring. The next it looks like a train wreck. You'll feel foolish. You'll feel like the universe is mocking your patience. That's exactly when discipline becomes visible. Anyone can invest when the market is booming, when optimism is high and everyone seems to be winning. But the wealthy are revealed in moments of fear, uncertainty, and panic, when prices fall, volatility spikes, and emotions threaten to override rational thinking. True wealth is forged when everyone else is panicking and selling at a loss, when fear dominates, and the disciplined few see opportunity instead of danger. I've watched countless people panic. I've seen men and women sell their investments at a loss, curse themselves for bad luck, and abandon years of careful planning in a single moment of frustration or impatience. It wasn't bad luck. It was impatience. It was a refusal to endure. They measured success in immediate gratification, in rapid results, in numbers moving fast enough to satisfy their ego. But wealth is earned quietly, in the slow, invisible years when the compounding snowball feels tiny and unimpressive. Those are the moments where most people quit, thinking their efforts are pointless. But those silent, uneventful years are exactly when the foundation for future freedom is being laid, brick by brick, dollar by dollar, decision by decision. Discipline is the bridge between poverty and financial freedom. It's not an abstract idea or a motivational cliché. It's a muscle, and like any muscle, it grows stronger with consistent exercise. Each dollar saved, each temptation resisted, each small sacrifice compounds in exactly the same way your money does. Each time you choose restraint over indulgence, patience over impulse, you strengthen the habit that ultimately separates those who achieve lasting wealth from those who don't. In the early years, discipline feels uncomfortable. It feels unnecessary. It feels like sacrifice. But over time, it becomes effortless, natural, and unstoppable. The same way a snowball slowly grows into an avalanche, your discipline compounds, multiplying the impact of every good decision you've made, quietly building a foundation no one can take away. The first $100,000 is a grind, but crossing it is nothing short of transformative. The process is slow, often frustrating, and at times invisible to anyone watching. But the moment you reach it, the world feels different. Suddenly, your dollars stop being passive. They start working for you. They don't complain, they don't argue, they don't call in sick, and they don't gossip. They quietly and silently multiply, creating more options, more leverage, and more freedom than you ever imagined while you were hustling for every single paycheck. This is the moment where the financial grind finally begins to pay off, not through drama or luck, but through the patient, disciplined choices you made over years. The money you've saved and invested begins to build the life you've been working toward, silently and steadily, without requiring constant effort or attention. Once your capital begins to outpace your labor, the rules of the game completely change. Opportunities that once felt unreachable or intimidating now appear clearly within your grasp. You can take calculated risks without fearing financial ruin. You can walk away from a bad boss, a toxic work environment, or a job that drains your soul because you have a financial buffer to protect you. You can invest when everyone else panics, spotting bargains and taking positions that the fearful and impatient miss. The threshold between being a laborer and becoming a capitalist has been crossed. You are no longer bound to the grind of trading time for money. Your money is working in parallel to you, quietly earning, quietly growing, silently creating leverage. But there's a warning here. This transformation is powerful, but it is fragile. Do not squander it. Do not chase flashy schemes, get-rich-quick promises, or speculative fads. Do not pull your money out of fear when markets dip slightly or when uncertainty appears. The snowball you've built through patience, discipline, and endurance can be destroyed in an instant if you act rashly. One impulsive decision, one miscalculated risk, one emotional reaction can wipe out years of careful planning. The transformation is only real when reinforced by continued vigilance, humility, and steadfast attention to the principles that brought you here in the first place. You must protect what you've built and let it continue to grow. Reaching the first $100,000 is not the finish line. It is the starting gun for a completely new stage of life. This is the moment your money starts working as your silent partner, compounding in ways that eventually overshadow your own labor. Freedom stops being theoretical. It begins to feel real in your day-to-day life. Suddenly, you can make choices that were impossible before. Taking a career pivot, pursuing a passion project, traveling without financial anxiety, or investing in opportunities that were previously out of reach. Your mindset changes. You stop fearing every unexpected expense and start thinking strategically about how each decision, each dollar, and each opportunity fits into a long-term plan. You begin to see the future you are capable of building, one that is no longer constrained by the limitations of working paycheck to paycheck. At this stage, life itself begins to feel different. Stress over money diminishes. Patience is rewarded. Decisions that once felt like sacrifices now feel like investments in freedom. Each dollar saved, each position held, each risk carefully taken, continues to multiply silently. The transformation isn't just financial, it's psychological, emotional, and strategic. You've moved from being a worker trapped by necessity to a capitalist, guided by choice. And once this transformation begins, everything you do has leverage. Your life begins to operate on a different plane, where time, patience, and capital create compounding results far beyond anything achievable through labor alone. What separates those who succeed from those who fail isn't genius, extraordinary intelligence, or luck. It's psychology, it's mindset. It's the way you think about money, time, and opportunity. It's the ability to delay gratification consistently, to tolerate the boredom of watching your balance grow slowly, almost imperceptibly, year after year. It's the capacity to resist the overwhelming urge to spend on fleeting pleasures while the world relentlessly distracts you with status symbols, social comparisons, envy, and entertainment. Those who fail are often brilliant, capable, and hardworking, but they sabotage themselves psychologically, confusing consumption with progress and short-term satisfaction with long-term wealth. Every dollar you save early on is a soldier in the war for your financial freedom. Each dollar that remains invested compounds quietly, patiently, steadily, while friends, family, colleagues, and neighbors may spend recklessly, chasing instant gratification, status, or momentary pleasure. Your patience is an invisible force operating on your side, quietly multiplying while the world around you seems obsessed with superficial appearances. While others chase the newest car, the latest phone, or a vacation that leaves them in debt, your dollars quietly multiply and prepare you for opportunities they'll never see. It's not flashy, it's not exciting, but it's unstoppable if you stay disciplined. Most people quit before the snowball even has a chance to roll. They exchange patience for instant gratification, confusing lifestyle with achievement and consumption with progress. They may feel like they are moving forward because they buy bigger cars, lease new homes, buy designer clothes, or take extravagant vacations. But in reality, they are trapped in a cycle of endless consumption. They live paycheck to paycheck, chasing status while never building a foundation that could create true freedom. This invisible trap is what keeps the majority chained to the wage treadmill, working harder and harder without ever making meaningful progress. It's psychological, it's invisible, and it is far more deadly than any financial misstep because it disguises itself as normal life. The psychological edge comes from controlling impulses, mastering self-discipline, and embracing delayed gratification at every turn. It's about keeping your eyes on the long-term prize, even when the short-term is tempting. It's about saying no to temporary pleasures, because you know the long-term payoff is far greater. It's about enduring the monotony of slow growth, recognizing that every small, patient decision compounds into exponential results over years, even decades. Wealth is as much a mental game as it is a financial one. Your mindset determines your outcomes, your consistency determines your results, and your patience determines whether your money works for you or against you. If you can master your mind, you will automatically master your money. Control your impulses. Resist the noise. Ignore the temptation to measure progress by appearances. Measure progress by the growth of your capital, the expansion of your options, and the freedom that comes from having your money silently working for you. Those who win at wealth don't just understand math, they understand psychology. They understand that long-term thinking, patience, and mental discipline are far more valuable than flashy gadgets, expensive vacations, or public approval. They understand that the real compounding happens first in the mind, and only then in the bank account. Your psychological edge is what allows you to endure when others quit, to stay calm when markets fall, to save when everyone else spends, and to invest when fear is all around you. It's what transforms the boring, slow work of accumulating capital into unstoppable momentum. Without this mental mastery, every financial strategy is vulnerable. With it, every dollar, every decision, every sacrifice multiplies exponentially, giving you leverage, freedom, and options that most people will never even dream of. Here's the unglamorous, inconvenient truth that most people don't want to hear. Money works. Labor alone does not. Sweat, effort, and long hours can pay the bills, keep you alive, and allow you to survive, but they will never build wealth at scale. Labor hits a ceiling, a limit beyond which no amount of time or effort can multiply itself. Capital, on the other hand, works silently, tirelessly, and invisibly, compounding your efforts far beyond what your labor alone could ever achieve. Once you have a base of capital, the entire world subtly tilts in your favor. The system begins to favor those who already have a foothold. 10% on $100,000 may not feel life-changing at first, but it is proof of concept. It demonstrates that the system works. It shows that compounding is real, tangible, and measurable. It is the first signal that your patience and discipline are paying off. that small, steady efforts combined with time will eventually produce exponential results. From that foundational base, everything compounds faster. Your financial returns grow faster than they did before. Your confidence grows. Your understanding of risk expands. Your ability to spot opportunities sharpens. Opportunities that once seemed distant, unreachable, or exclusive to others suddenly become visible and attainable. Until you accumulate that initial capital, you are just a dreamer, perpetually imagining what could be, trapped by the limitations of time, energy, and lack of leverage. But once you have it, once that first significant pile exists, you finally gain a seat at the table where real money is made, where decisions can be strategic rather than reactive. You are no longer a participant playing by someone else's rules. You become the one setting your own rules, creating your own opportunities, and building leverage that compounds far beyond your own labor. You don't need brilliance to become wealthy. You don't need a genius IQ or a PhD in finance. What you need is avoidance of stupidity. Avoid the traps that destroy wealth: excessive debt, lifestyle inflation, impulsive spending, and the temptation to chase every shiny scheme that promises quick riches. These are the subtle poisons that consume your capital before it can grow. Let your money do what labor never can. Work silently, tirelessly, and relentlessly for decades. Let it multiply in ways you can't replicate through sheer effort. While your labor ends when you stop working, your capital continues to grow, quietly and invisibly, compounding your gains over time. The system itself is simple, almost deceptively so. The mechanics of saving, investing, and compounding require no brilliance. The challenge lies in endurance, in maintaining discipline when the temptation to spend, over-leverage, or get distracted by instant gratification is ever present. Every small decision, resisting a purchase, reinvesting returns, staying patient during market fluctuations, compounds alongside your money, strengthening the snowball effect. The truly wealthy understand this. They respect time, patience, and compounding above all else. They know that true freedom, true financial power, is earned not by working harder, but by leveraging money to work for you. In short, capital is your ticket to freedom. It multiplies. It creates options. It allows you to take calculated risks, seize opportunities, and escape the constraints of the labor treadmill. Until you understand this principle, you are at the mercy of your time and energy. Once you embrace it, you realize that the rules have changed. The first $100,000 isn't just a milestone. It's the foundation upon which everything else in your financial life is built. It is the starting point where your journey shifts from mere survival to strategic growth, where the leverage of capital transforms your life in ways labor alone never could. Here are the 5 takeaways you should remember. 1. Cut your expenses ruthlessly. Spend less than you earn. Every dollar you don't spend today is a soldier building your future. Small sacrifices now compound into massive freedom later. 2. Increase your income wherever you can. Side hustles, skill building, negotiations, any honest method of earning more counts. The more capital you can funnel into investments, the faster your money starts working for you. 3. Save and invest the difference. Don't let your money sit idle. Put it to work where it can grow and compound. Learn the basics of investing. Understand risk, reward, and time. 4. Ignore the neighbors, the colleagues, the social pressure. Comparison is the thief of progress. You are building your future, not keeping up with someone else's lifestyle. 5. Be patient, be disciplined, be relentless. True wealth is not built overnight. It is built through repeated actions, year after year, with consistency and endurance. The first $100,000 is your ticket off the treadmill. It's your first taste of freedom. It's the moment when your money starts working for you instead of the other way around. After that, the rules change forever. Get it. Protect it. Let it grow. And once it does, you'll see the difference between being a worker with dreams and a capitalist in control of your life. You'll understand the power of patience, the compounding of effort, and the value of the first hard-earned milestone.